This is another big week for data. Our business outlook, down. CPI, low. And get this, there's now a 90% chance of a rate cut in Canada next week. Now add this to one of the weakest summers in a long time for Toronto real estate, and multiplexing deals in Toronto are looking pretty lucrative out there. But stick around because in this video, we're going to break it all down. And before I do, don't forget to hit that like button and subscribe for more Toronto real estate investing insights. All right, so check this out. The Bank of Canada just dropped their Q2 Business Outlook survey yesterday, and it's looking pretty gloomy. Canadian businesses aren't as worried about inflation or recession anymore. Nope, they're all doom and gloom about sales outlook and worried about taxes and regulations. Probably because the government recently changed capital gains taxes last quarter. But here is where it gets a lot more interesting. Before the survey, the chances of a rate cut by the Bank of Canada was sitting at 60% for next Wednesday. After yesterday's survey, 80%. But wait, there's more. CPI came in lower than expected, and suddenly we're looking at a 90% chance of a rate cut next Wednesday. That's July 24th, everyone. Mark your calendars. Now let's break down this a little bit more. Goods inflation, slow to an insane amount. Food inflation, pretty stable. Energy, this is also super low, but we know that the Bank of Canada doesn't look too closely at this. And services inflation, this is where it is still high, but it is a lagging metric, and the Outlook survey shows that businesses aren't as concerned about wage growth moving forward. Now here's the kicker. Mortgage interest is at an insane high amount at 22% still. If you strip that out, CPI is at 1.9%, and on a monthly basis, we're actually in deflation. Now here's where it gets even more interesting for us real estate nerds. After June's rate cut, sellers are jumping in, but buyers are still pretty hesitant. And that's why Toronto prices for freeholds, detached, and semi-detached homes have been falling in June. Detached homes, down 4%. Semis, down 9% from May to June. But listen up, because this is important. Condos and houses are not the same. Condos are much more oversupplied. They have low rent yields and very few value add opportunities. On the other hand, the government is all about the missing middle these days and trying to fill in the density in neighborhoods with houses. So if you end up buying a single family home, convert it into multiplex, suddenly your cash flow goes from very negative to very positive. And get this. If you can get a 10% discount in today's slower Toronto summer market, plus fixed rates dropping from 5.2% to 4.9% lately, your cash flows get an even further boost. So even if rents do dip a bit, which we do expect could be possible in the future, you've still got a buffer. So if you are thinking about diving into Toronto multiplexes, this is the time. And hey, if you do need help, we're here for you. Our Toronto real estate sales brokerage specializes in buying and selling investment properties across Toronto, particularly houses and multiplexes. Whether you're interested in turnkey multiplexes or considering converting a single family home into multiplex, count on us to guide you towards smart real estate decisions. Now, here's how we can help. We'll chat with you to learn more about your situation, teach you how to tell a good investment from a bad one, and find you the perfect property that suits your goals. Need renovations? No worries. We've got reliable contractors we can connect you to and coach you as you manage your project. And if you are up for it, our team can handle renting out and managing your property too. So if you are ready to dive in, just head over to this link and let's chat.